Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It's been a rather volatile beginning of the week. On Monday, most of the majors moved up against the US dollar, only to have those gains lost today on Tuesday. Heading into the rest of Asian and European trading, we have a few pairs that are in interesting positions, and there's news that's coming out that could affect the pairs greatly. The first is the Great Britain Pound USD cross. The pound cross has found a pretty solid base right here at the 50 fib from the lows from mid-January that comes in around 157.67.70 area. This has held the pair up, and there's also daily price support just below at 157.30, so it's a solid support zone. Slightly above, we have so far this week we've hit significant resistance at 158.35. The pair has just been channeling within this narrow range. But heading into this evening, we have the Bank of England minutes to be released. These minutes could, if depending on the rhetoric that comes out, could push the pair significantly above or below this level. If we get a break back above the 50 fib with a significant amount of support, we could see a move right through the 158.35 area, all the way back up towards the 159.80, 160 zone right here. If we get a break below because of fear of further further bond purchases, we could see a move down towards the 156 area that you can see is capped the price movement for the last few months. The next pair of interest is the EURUSD, and this pair is simply in an interesting position because it's very close to year-to-date lows. Year-to-date low would be at 126.25, and if we get a break through that, we could see a swoosh down towards the 120 area because there's not much technically between 120 and the 126 to 125 area. We also have a daily price support that comes in at 126.45, so we have a resistance or support zone right here between 126.45 and 126.25. Any bounces off this, and we could see another move back up to 128.15. For the meantime, I would just play this range because I would assume that consolidation could be in the cards until the end of the week. The last pair of interest is the USDJPY. As you can, the yen moved higher aggressively today after Fitch downgraded its debt rating from A+ to A-. If the pair can gain traction and stay above or towards this 80 level and above the 79.40, we could see a beginning of a trend higher past 80.60 and 81. This could be due because the internal pressures inside Japan is for the Bank of Japan to intervene once again because exporters are beginning to feel pressure. And they're trying to export their way out of the recession, and there's also new fears of deflation in Japan. So if we can get a move towards 80.60, we could get it, or 81, and continue to drift higher, we could get a retest of the year-to-date highs in the 84 region. I know that's a little bit of a stretch. Let's see originally if we can just break above the 80.60 and 81 area. But I wouldn't be in the mindset too short right now with fears of intervention coming in. You can't outplay a central bank. That's Currency Watch. So everybody keep your trades keen and play it safe.